So is the screen clear? Please tell if this screen is clear or not. Everything is visible to you? Okay. Okay, so we'll start with UPSC EPFO Social Security schemes today, and we'll try to cover as much schemes that are important from the previous year questions perspective. Okay, so before we'll study about social security schemes, I just want to tell you that I have prepared some set of previous year questions that we will solve at the end of our lecture. Okay. So based on these previous year questions, what actually I have learned that the UPSC is only interested in asking few features regarding to social security schemes, and those features are the eligibility criterion, what are the key benefits of the scheme, any special feature, or any basic funding pattern. What is the funding pattern between center and state, or is there any contribution from state only or the center only? So based on these features the questions have been asked, and nothing more much deep than that. So accordingly we will study all the schemes, and lastly we will solve the MCQs so that you can also relate what the UPSC is actually interested in asking while throwing questions in EPFO. Okay, so first of all let's have a broad look at what do we mean by social security. Just a basic theoretical concept that social security is nothing but protection given by society or state against key term providential mishap, or we can say any contingency. So based on these things, that such incidents upon which the person has no control against such things, the security is provided by either state or society. This is the essence of social security. So based on this essence, you will see based on In this essence, every scheme is related to that only. Pension scheme, against retirement, insurance schemes, okay, so those preventing or providing benefits to people. So now let's, without wasting time, let's start with our first scheme, which is National Pension Scheme, or we can say National Pension System. So this scheme was initially launched in 2004 for central government employees. Okay, but make sure this is very crucial thing. That except armed forces, that armed forces were not included within this scheme. Okay, and various questions in the civil services examination as well as in the UPSC EPFO, this question has been asked by framing it including armed forces. So this statement becomes automatically wrong. Okay, so please take note of this. Okay, then the scheme was extended to state government too. Almost all state governments. Okay, then from the state and from the center it got extended to everyone. So you will see how this scheme get extension to almost every entity within the Indian space. So in 2009 it was extended to all citizens. Okay, in 2011 it was extended to corporates for their employees. Okay, then in 2015 it got extended to NRIs. In 2019 it got extended to overseas citizens of India. Okay, so based on these years and based on these data, the schemes got extended. Remember these key data and the key year, then you will be able to do any of the questions. Okay. Now let's look at what is the eligibility criteria within the National Pension Scheme. It says any citizen of India, resident, non-resident and OCIs that we have discussed just now, that it has been extended to OCIs too, between the age group of 18 to 70 years of age is eligible under this scheme. Okay, remember this key criteria. Okay, next thing is, what are the key benefits under the scheme? So tax benefit is 2 tiers tax benefit. What are these benefits? Let's have a look. So the first one is that within the target, within the limit of 1.5 lakhs under section 80 CCE, the NPS contribution can go under. Okay, so NPS contribution subject to 10% of the person's salary, and within this limit is exempted. Okay, and then in addition to this, under section 80 CCD1, additional contribution of 50,000 in NPS is also deducted from the gross salary. Okay, so this is another feature. So these are the 2 tiers of taxation benefits that the NPS gives. Okay, now next is NPS is regulated by PFRDA, Pension Fund Regulatory and Development Authority. Okay, so any scheme related to pension will be regulated by Pension Fund Regulatory Development Authority. Okay, so we are actually only focusing on key aspects of these schemes related to the specifically EPFO examination, because whenever the examination changes, be it of regulatory bodies, then very specific details also becomes important. But with respect to EPFO examination, broad aspects of schemes and broad features are important. Okay. So the NPS scheme has two types of account. The first one is tier 1 and tier 2. The main one is tier 1, under which minimum amount per contribution is 500. Minimum contribution per year is 1000. And minimum number of contribution within an year is 1. Okay, so these are the basic details. The chances of coming of these details are bit less probable. However, we need to learn these things. Okay, so this is the main account, main savings account, based on which taxation benefits are given. Okay, another account is tier 2 account. It's like a savings account, tier 2, where we can withdraw the amount, withdraw our contributions at any point of time. However, opening of this account is subject to, first of all, we have to have tier 1 account. Okay, so this is primary account. Okay, these are the key data with respect to tier 2 account. So the first one is minimum contribution at the time of opening of that account is 1000. Minimum amount per contribution afterwards is 250. Okay, so this is key aspects of tier 2 account within NPS. Okay, now let's move on to the exit provisions with respect to National Pension Scheme. So the first one is partial withdrawal. So there are three types of withdrawal: normal withdrawal, premature withdrawal and partial withdrawal. Learn these things specifically and the data with respect to each and every withdrawal provisions. Okay, so the first one says that after completion of 3 years, subscriber can withdraw 25% of his or her own contributions. Okay, and these withdrawal is only based on some conditions. Okay, so what are these conditions? So the first one is illness, disability, education, marriage of children, purchasing property, starting a new venture. So these are the conditions based on which a subscriber can withdraw its 25% of his or her contribution. Okay, and that is only possible after completion of 3 years. So these are the conditions under partial withdrawal. Okay, don't get confused with partial and premature. Learn each and everything specifically. Under premature withdrawal, let's focus on all citizens model, where it says after completion of 5 years or before completion of 3 years if the subscriber has joined after 60 years. Okay, so this is a conditional focus on 5 years one. Okay, then the subscriber can withdraw maximum 25% of the corpus as lump sum, a minimum 80% of that corpus to be utilized for purchasing an annuity plan. Just have a glance at it, don't get too much burdened by these details, because in UPSC examination mostly they will just ask how many types of withdrawals are there. Okay, so there are 3 types of withdrawals. Last is normal withdrawal, which is after completion of 60 years. Okay, and that too 60% of the corpus as lump sum and minimum 40% of that corpus to be used as for purchasing an annuity plan. Okay, so this is the conditions of exit. Now let's move on to the provisions of nominee and other things. So it says that if the subscriber dies, then the whole wealth or the 100% of NPS wealth will be transferred to nominee in lump sum. Okay, that means at a time every contribution or every wealth, every interest that the contribution has made will be delivered to the nominee. Okay. So this is what the provision says. Okay. Now let's move on to the next scheme, which is Atal Pension Yojana. This is also very important scheme. Numerous questions, 2 to 3 questions per year has come based on this scheme. Okay. And we'll do some questions based on this. So the first one is, scheme was launched in 2015 and it caters to all citizens in the unorganized sector. Atal Pension Yojana, why was the need for it? Because NPS covered all the organized formal workspace, and this big chunk of our country were not covered under this NPS scheme. So Atal Pension Yojana covered this set of people under this scheme. Okay, so based on these key terms, you will be able to understand the features also. And the key term here is also that defined pension is there. What do we mean by defined pension? That pension is already defined, that X, Y, Z amount will be given. Okay, and this we will see in the features. So let's see the eligibility criteria. So the first and primary thing is, all Indians in age group of 18 to 40 years can join, and this is subject to the above criteria that only unorganized sector persons can join. Okay. Next thing is, exit and start of pension will be 60 years. So minimum 20 years the contribution will be made based on if a person joins at 40 and then exits at 60. Okay. So the next thing is, there is a contribution from the central government, and the contribution is on the 50-50 basis. That whatever amount a person from the unorganized sector will invest or will contribute in the Atal Pension Yojana, similar amount will be contributed by central government. Okay. So this is another basic feature. And this is what the fixed pension we were talking about. Fixed minimum pension of 1,000, 2,000, 3,000, 4,000, 5,000 per month. And this is, so the range we are actually talking about is from 1,000 to rupees 5,000. Okay. So this is the key range in which the pension will be given to the subscriber. Okay. Regulation, as I have already discussed with you, every pension scheme will be regulated by PFRDA. Next thing is, what are the basic features? So in case if there is any death of the subscriber, then his or her spouse will be entitled to receive the same amount of pension as the subscriber would have been got. Okay, would have been gotten. Okay. And there is also another provision that even if the subscriber and the spouse both died, then nominee of the subscriber will be entitled to receive the pension wealth. So we have the provision for spouse, we have provision for nominee also. So, okay. And there is also additional flexibility being given to state governments too, that on addition to what the central government is actually doing, they can provide additional voluntary co-contribution. Okay, that the central government is actually providing 50% that same amount, but state governments are also allowed to contribute for the subscriber. So now let's study the exit schemes. That if a subscriber exit before age of 60, he will be refunded the contributions only. On that too, only his or her, not the central government contribution. Okay. Now there is another scheme, Swavalamban scheme. Okay, so this scheme was actually ended and the subscribers of this scheme was transferred to Atal Pension Yojana. Okay, so this is the key aspect to it. Now let's move on to the next scheme, which is Pradhan Mantri Suraksha Bima Yojana. Pradhan Mantri Suraksha Bima Yojana and Pradhan Mantri Jeevan Jyoti Bima Yojana, important schemes. Questions have arrived based on these schemes. Okay, so let's see what is the scheme all about. So launching year of the scheme was 2015. Okay, and the scope of coverage, all saving bank account holders from the age of 18 to 70 years. Okay, so this is the eligibility criteria for the Pradhan Mantri Suraksha Bima Yojana. Okay, now let's move on to what does the scheme provides. So the scheme provides insurance for accidental death and disability cover. Okay, it is an insurance scheme offering accidental death and disability cover. It's not a life insurance scheme. Okay, it's not a life insurance scheme. So it is a accidental death and disability cover. So this is key thing, very important. Okay, and what are the benefits under this scheme? That in case of death, 2 lakhs will be given to the subscriber. Irrecoverable loss of both eyes and loss of limbs, then also the subscriber will get 2 lakhs. And if there is partial disability, then the subscriber will get 1 lakh. Okay, we will try to provide you the PDFs, okay, with respect to this. Now, what are the other features of Pradhan Mantri Suraksha Bima Yojana? So the premium that the subscriber has to submit is ₹20 per annum per member. So only 20 rupees you need to submit to the insurance company and you will be much assured with the 2 lakh rupees insurance cover for accidental insurance and death. Okay. And this 20 rupees will be deducted from your account through auto debit. Okay, so for every year around June, 20 rupees will be deducted based on if you are a subscriber to this insurance scheme. Okay, next thing is insurance cover is restricted to only one bank account. Suppose you have 2 bank accounts, different bank accounts within SBI, okay, or someplace else. Okay, so if in the name of yours there is one policy, insurance policy, and there's in another bank account also you start another policy, but the rules and regulation of this scheme says that only one policy to your name per member is allowed. Okay, another 20 rupees for another scheme will be forfeited. So now let's about the developments within this scheme. What are the developments? With effect from 1st June 2022, the premium rates, which was initially ₹12 per annum, were increased to ₹20. That's why I have given ₹20 over there in the notes. Okay, so let's go to the Next thing, which is Pradhan Mantri Jeevan Jyoti Bima Yojana, and this is life insurance scheme. Okay. Maybe currently it is also there. So the Pradhan Mantri Jeevan Jyoti Bima Yojana were being launched in 2015. Okay. So it is a 1 year cover. It is a scheme that offers life insurance cover for death due to any reason. Okay. And what are the other age wise criteria? It is 18 to 50 years. So we have been seeing various criteria from 18 to 40, 18 to 70, and now 18 to 50. Okay. These are the criteria that you must remember, based on which the question arises. Okay. Next thing is similar to the Pradhan Mantri Suraksha Bima Yojana. It also says that only one savings bank account with one person will only be eligible for one scheme, one insurance scheme. Okay. Auto debit facility, here also, that the premium will be deducted by the bank itself for the insurance company, and this is the price of this is the premium, that 436 rupees, and this has also been updated from 1st June 2022. It was initially 330 rupees. Okay. Now let's move on to the next scheme, which is Pradhan Mantri Jan Dhan Yojana. This you have already learnt about, that it is a national mission for financial inclusion, which wants to ensure access to financial services that are from banking perspective, insurance perspective, from pension perspective, and financial literacy perspective also. Okay. So what are the basic themes of the scheme? Banking the unbanked, securing the unsecured, funding the unfunded. You can remember this from BSF. Banking the unbanked, securing the unsecured, funding the unfunded. Okay. Next we'll see the 6 pillars of the scheme. What are these 6 pillars? In these 6 pillars you will be able to understand what are we actually trying to do in this scheme. Universal access to banking services, basic savings bank account with overdraft facility of 10,000 rupees. So remember this overdraft facility and the corpus. Then there is financial literacy programs, creation of credit guarantee fund to secure the banks who are providing these overdraft facilities. Okay. Then there is insurance also, accidental cover up to 1 lakh and 30,000 life cover. And next thing is pension scheme for unorganized sector, which we've discussed just before that. Okay. So this scheme was launched in 2014. Okay. The dates for announcement and launch you can learn, but the year is very important from the perspective of examination. Okay. Basic eligibility condition for opening the bank account: a person or an individual must be of 10 years. Okay. And this accidental insurance cover has been increased from 1 lakh to 2 lakh. Okay, no minimum balance required. This we've already discussed. And this overdraft facility will only be permitted after 6 months of that operation of account. Okay, once you open an account and after 6 months only, you'll be able to get that overdraft facility of 10,000 rupees that you can get from your RuPay credit card or debit card. So these are the modifications that we were talking about. That overdraft limit was raised to 10,000 and expanded coverage of accidental insurance has been raised from 1 lakh to 2 lakh. Okay. So learn the new data. Okay. Jan Dhan Darshak app related to the Jan Dhan scheme, which tells about the banking touch points, and it also tells us about the data where the banking system hasn't been reached. Okay, let's go to the Pradhan Mantri Vaya Vandana Yojana. Okay, here the scheme was launched in 2017 and this scheme is dedicated to senior citizens. Okay, so the policy term is 10 years, that once you submitted the lump sum, after 10 years you will get pension. Okay, so this is what the criteria is all about. Implementation is being done by LIC, and against the contributions and against the amount that you have put in this scheme, you can also avail the facility of loan. Okay, and the loan facility is only possible after 3 years of the policy. That once today if you have subscribed to Vaya Vandana Yojana, then only in 2026 you will be able to avail the facility of loans. Okay, and that loan can be guaranteed up to 75% of the purchase price. So this is very important key data that you must remember. Okay, and what about the premature exit? Because of critical terminal illness and various other reasons, like okay, of either himself or herself or his or her spouse, then the surrender value can be 98% of the purchase price. So this 98% of the purchase price is arrived based on 2% administrative cost being less. Okay, but in case of suicide, the whole amount is given. So remember this. Okay, and what about the maximum limit under the scheme any citizen, senior citizen person can invest is only 15 lakh rupees. Okay, so learn these basic features which are very important from the perspective of examination. And under the scheme, Finance Minister has been given the responsibility of approving annual rate of return that will be given for the contribution of senior citizens under this scheme. Okay, so remember this also. Now let's learn about social security schemes of Ministry of Labour and Employment. Okay, so the first one is Pradhan Mantri Shram Mandhan Yogi Yojana. Okay, it says that it was launched in 2019 to ensure old age protection for unorganized workers. Okay, so specifically for unorganized workers, and the criteria is 18 to 40 years, and then monthly, and learn the criteria here because it is very important. 18 to 40 years and monthly income of 15,000 or below must be there. Okay, a person whose monthly income is more than 15,000 is not eligible. Savings account is self-understandable, and the contribution that he or she needs to make under the scheme ranges from rupees 55 to rupees 200. Okay, so this is the eligibility criteria, that who can be there and who cannot be there, who cannot engage in this scheme is persons engaged in organized sector. Obviously, this is, since this scheme is for unorganized, these persons are automatically become ineligible, and an income taxpayer is also ineligible with respect to this scheme. Okay. Now let's go to what are the key benefits of the scheme. So the first one is that minimum assured pension of rupees 3,000 per month will be given. Okay, and that will be given after the age of 60 years. Next, let's go to the family pension. That what do we mean by family pension? That if a person, due to any reason, if a subscriber dies, then the spouse of the beneficiary will get 50% of the pension. Okay, the spouse won't get all of the pension, but he or she will get 50% of the pension. Okay. Now let's go to the other key features. Auto debit facility, that I have already told you that it is, the contribution will be deducted automatically from their savings account. So similarly, if they are subscriber to this scheme, the contribution will be automatically debited. And now another feature is the central government will also contribute based on 50-50 basis. Okay. Another thing is, it is a voluntary scheme. Nobody is forcing you, nobody is saying that it is a mandatory scheme. Okay, so a person who are in the unorganized sector can voluntarily choose to opt for this scheme. Okay, now let's move on to the exit and withdrawal features of the scheme. So if a person exits before 10 years, then the contribution done by him will only be given. Okay, but after a period of 10 years, but before 60 years, okay, but before the superannuation age, then he will get his contribution plus the interest on his contribution. See, in this portion interest wasn't there. In this portion the government contribution and the interest on that is also not there. Okay, and last is normal withdrawal. In that case, he or she will get both the contributions, and this we've already discussed, that because of the death of the subscriber, his or her spouse will get there must be this. I'll just clear this thing. Let's move on to the next scheme, which is National Pension Scheme for Traders and Self-Employed Persons. Okay, so this scheme tells us about the pension scheme. Earlier was only limited to the unorganized workers, and this is specifically for traders and self-employed persons. So a pension of 3,000 per month after attaining of age of 60 years will be given under the scheme. Okay, and if a subscriber dies, the spouse of the beneficiary shall be entitled to receive 50% of the pension. Okay, and family pension is applicable only to spouse, no other person. Okay, so this is what the scheme is all about. It was launched in 2019. Okay, and since eligibility is also 18 to 40 years, the contribution is also similar to the earlier scheme, which is Shram Yogi Mandhan Yojana. Okay, now let's move on to the what are eligibility criteria. 18 to 40 is similar, and since these people are self-employed traders, so salary will not be placed here. Here only annual turnover is there, which should not exceed 1.5 crores. Okay, and another thing, that GST IN number is only required if the turnover is above 40 lakh rupees. Okay, and these people are ineligible who belongs to the organized sector, such as covered under any other scheme, an income taxpayer, or enrolled under Pradhan Mantri Shram Yogi Mandhan Yojana. That's the earlier one that we discussed. Okay, the subscriber contribution will be made through auto debit facility. Okay, the account will be automatically debited, and the contribution by the central government will be done on a 50-50 basis. Exit and withdrawal is similar to the earlier scheme. Okay, so earlier thing was, while this is common amongst the Shram Yogi Mandhan and here also, that in the case of death of subscriber as well as spouse, the entire corpus will be credited back to the fund, and that's what I was talking about earlier also. Here, and this is common here also, that if both people, the spouse and the subscriber dies, then the contribution will be credited back to the fund itself. Nobody related to the subscriber and nominee will not get the amount. Okay, so this is what the major provision is there with respect to these two schemes. Now let's go to our last scheme, which is Pradhan Mantri Fasal Bima Yojana. Okay, so this is a crop insurance scheme which has been launched after merging of various schemes. Let's see. So the first one is National Agri Insurance Scheme, Rashtriya Krishi Bima Yojana, Modified NAIS, Farmer Income Insurance Scheme. All these schemes get merged into Pradhan Mantri Fasal Bima Yojana. Okay, so but this scheme was left, restructured weather-based crop insurance scheme. So right now with respect to crop insurance, we have two schemes. So the first one is Fasal Bima Yojana and the next one is restructured weather-based crop insurance scheme. Okay, so let's see the features of both. So the eligibility is all farmers including sharecroppers and tenant farmers. So it covers a wide ambit of people within it, since it covers all the earlier crop insurance scheme catering to different stakeholders. So obviously the eligibility criteria should have been like this. It provides insurance coverage and financial support, okay, and to stabilize income of farmers and to ensure flow of credit to the agriculture sector. The most important thing is the premium is 2% of the amount insured for Kharif crops, 1.5% for the Rabi crops, and 5% for the horticulture crops or commercial crops. Okay, so this is the important point. Restructured weather-based crop insurance was launched in 2016. Okay, the coverage is detailed here, and the scheme is optional for the non-loany farmers, and rest all conditions are as per Pradhan Mantri Fasal Bima Yojana. And what are the basic major things that the Fasal Bima Yojana covers under it? So rainfall, deficit rainfall. This problem is persistent within the Indian subcontinent. Okay, so obviously this is the major thing that any crop insurance must cater to. Okay, next thing is relative humidity, high temperature, heat, wind speed, combination of above, and even hailstorm, cloud burst may also be covered as add-ons. Okay, this we've already discussed that for Kharif 2% or sum insured or actuarial rate, whichever is less. For Rabi 1.5%, and for commercial horticulture it is 5%. Okay, recently the government launched the restructured Pradhan Mantri Fasal Bima Yojana 2.0, and in it what changes have been done? That center's share of premium subsidy from 50% has been reduced to 25% in irrigated areas and 30% in unirrigated areas. Okay, so this is the key changes that have been made, and the post harvest loss is only available up to maximum period of 14 days from harvesting. So learn these key data. So this is all about what the social security schemes is, and based on the learnings of these schemes, let's try to solve some MCQs. And these questions have been asked in UPSC EPFO examination earlier, based in 2020, 2016, 2017 and 2015. Okay, so do the first one and tell me the answer. So the question says, consider the following statements with respect to Atal Pension Yojana. Beneficiary must be in the age group of 18 to 40 years, will receive pension only after he attains the age of 60 years. After the death of a beneficiary, his spouse continues to receive the pension. No nominee of the beneficiary is permitted. Please tell me what is the correct answer of this question. 100. Try to do this. Tell me in the option what will be the correct answer, A, B, C or D. Then I will do the question. So since the eligibility criteria is correct, so this is correct. Okay, only after 60 years the pension will be received, so this answer is also correct. And after the death of beneficiary, this is also correct, but no nominee of the beneficiary is permitted. This is a wrong statement, because even after the death of spouse in Atal Pension Yojana, the provision for nominee is there. So fourth option is incorrect. Answer is C. Okay, so this is the first answer. Now let's try to do this next question. Consider the following statement regarding Pradhan Mantri Suraksha Bima Yojana. See what basic things are being asked. Try to do this question also. It is applicable for all bank account holders up to the age of 60 years. It is a life insurance cover. It is an accidental insurance cover. The insurance cover death and permanent disability due to accident. So try to do this question. So one option given by Rishabh Modi is D. Okay, we've already learned about these things, very basic thing. Suraksha Bima Yojana doesn't cover about life insurance, so second option is eliminated. And since it is a accidental insurance cover, so 3 is not there, so the answer should be B. Okay, yes, 3 and 4. So while doing the answers, try to read the questions carefully and also try to mark the options also carefully, because sometimes what happens in the examination, we get nervous and instead of marking this B answer for 102, we mark in 103. So let's be focused with respect to that. Okay, and this will only be possible by doing practice. Okay, let's try to do the next question, which is, this is a theoretical question, not related to schemes, but related to the concept of social security. So let's try to do this also. Social security may provide cash benefits to persons faced with sickness, disability, unemployment, crop failure, loss of marital partner. Try to do this question also. Okay, so since social security, I've already told you that it is a social protection given by society against any contingency or mishap. So based on this logic, try to do this question. So all these things are contingency and mishap that any person don't have control over. Okay, nobody has control over loss of marital partner, crop failure, unemployment, sickness and disability. So the answer should be 1, 2, 3, 4. So that's why I say, based on the theoretical aspect, or if your concepts are clear, then you'll be able to do all these questions in a confident manner, not have to do some tricks or something else. Okay, next thing is, let's do this another question. To consider the following statement regarding Pradhan Mantri Jeevan Jyoti Bima Yojana. So it is applicable to all adults above age group of 18 years. The premium is deducted from the account holder's bank account through auto debit facility. The life insurance worth is decided by account holder and he has to pay the annual premium accordingly. Life insurance amount is given to the family after the death of subscriber. Try to do this answer. Then I'll show the So the first option given by Rishabh is 2 and 4. Okay. Any other option? So let's try to do the answer. So since this option is correct, because we have learnt about auto debit facility in the Jeevan Jyoti Bima Yojana, so we can eliminate these two options. Okay. Now let's see third and fourth option. The life insurance worth is decided by the account holder. No, because life insurance worth is fixed, which is 2 lakh rupees. Okay, so this option is also eliminated and 2 and 4 is the correct answer. So C is the correct answer. Well done. Okay, now so you are understanding that only these basic things are being asked, nothing going into detail, nothing tier 1, tier 2 account, some basic things. Okay, so we have to prepare accordingly. Don't go too much into it, just read the most important features that any newspaper give with respect to these schemes. Okay, so let's learn about let's do one question about Atal Pension Yojana. Then which of the following statement is not correct? So all these options are given. There is a guaranteed minimum pension, monthly pension for the subscribers ranging between 1000 to 5000. Benefit of minimum pension would be guaranteed by Government of India. Government of India co-contributes 50% of the subscriber contribution, and it is applicable to all citizens of India aged above 40 years. Tell me, what is the answer? Right. Anybody else wants to do this? Rishabh is well prepared for this examination. Good. The answer is D only, because we've seen what the criteria is, 18 to 40 years. Okay. Let's go to the 90 question. A bit of tricky. If you have been focused in the class, you could easily answer this question, and I'll tell you why it is tricky. Which one of the following is the amount of annual premium of Pradhan Mantri Suraksha Bima Yojana for accident and disability cover up to 2 lakhs? And I'll tell you the detail also, that this question was asked in 2017. Yes. Because at that point of time, the premium rate were 12. Right now it is 20. So please remember this 20 only. Okay? Yes, correct. Let's do some other questions. What is the minimum and maximum age at which a subscriber can join Atal Pension Yojana? This we've already done in earlier question. C. B answer is there, 18 to 40 years. Okay. So that's why I'm saying that these social security schemes are being asked again and again within the same examination. So the importance of them becomes essential. And this question was asked in Civil Services Examination Prelims 2017. Let's try to do this question also. Who among the following can join the national pension system? Resident Indian citizens only, persons of age from 21 to 55 only, all state government employees joining the services after date of notification, and all central government employees, including those of armed forces. Tell me the answer of 29. This question. This is B, correct? Give me the answer of this question. Rishabh, read this statement once again. It's not correct. D is not correct. Yes. So this thing makes this statement wrong because it excludes armed forces. So the option, this is also wrong. This data is also wrong. Answer should be C. Okay. Is this clear? Or any doubt on this? So let's try to do this last question also. Which of the following are the instruments of providing social security in India? Okay. This is also a theoretical question, not related to any scheme, but please try to do that, because because social security is also a subject in industrial relations, a chapter in industrial relations, okay, that comes in EPFO examination, and this is from the EPFO examination itself, the question. So let's try to do this. Which of the following are the instruments of providing social security in India? Income tax, Provident Fund, General Sales Tax, LIC, National Pension Scheme, and Postal Provident Fund. So what should be the answer? C C. Okay, we'll look at it. Any other? Yes, the answer is C only. Can anybody tell how do you come up with this answer? Then we'll try to see if our reasoning is all right or not. Okay, I'll explain. So, Social Security is providing protection through either cash benefits or insurance benefits. In the end, actually benefits are being given to them, not taking from people. Okay. So income tax and general sales tax are things that are being taken from the people. Okay. So these two options can get eliminated. So 3 wrong. And the answer will be C only. So well done. Well done. So in this manner you will be able to do questions that are not directly as per the schemes also. So great on your part. Okay. So thank you for joining. I hope you learned something from this lecture. And see, just very quick thing, do previous year questions. You will be much more sorted for the examination, because previous year questions tells you what exactly how much depth in which the civil services or the UPSC is actually asking the question. Okay. So thank you for joining. Let's meet in the next session. Okay.